Did you know that ARK Invest thinks Tesla will go up soon? Cathie Wood-led firm ARK Invest has been keeping its eye on Tesla stock, and it may be worth considering why they believe Tesla stock will soar soon. That said, you probably would not want to miss this one. We do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy, says ARK Invest CFA Tasha Keeney. Before we go on, Moomoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries, such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. It's a known fact that ARK Invest founder Cathie Wood is a longtime Tesla bull, which is why ARK Invest's CFA Keeney's statement does not come as a surprise. ARK Investment Management LLC, simply ARK Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. A few days ago, ARK Invest's Tasha Keeney joined CNBC's Squawk Box to react to Tesla's latest quarterly earnings report. When asked about the reason for her and ARK's bullishness on Tesla, Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, and so we have to remember that it's still an early market, but we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." According to Keeney, this is because Tesla uses their customer cars to capture data to train their neural networks. According to Tesla, the neural networks are their bird's-eye view networks that take video from all cameras to output the road layout, static infrastructure, and 3D objects directly in the top-down view. The said networks learn from the most complicated and diverse scenarios in the world, iteratively sourced from our fleet of millions of vehicles in real time. Keeney emphasized that on the recent earnings call, Tesla CEO Elon Musk reiterated that they are going to do a wide release of the full self-driving beta software to North American customers. That signals confidence in that platform, which by the way we think is a multi-trillion-dollar market in the next 10 years, says Keeney. In the said segment, CNBC Squawk Box host Joe Kernan asked Keeney about robotaxi. Keeney said, "They've committed in previous calls to mass manufacturing of a robotaxi-specific vehicle, so I do think it could be that car. And again, I think that manufacturing commitment is pretty meaningful because you can promise full autonomy via software all you want." Keeney was also asked to share her thoughts in terms of the current environment recession fears and whether or not Musk seems to have any demand fears or supply concerns. "As I read other articles and other analysts' opinions, I think there are demand fears out there. I think that they're unfounded," says Keeney. ARK Invest CFA looks at EVs as a percentage of overall auto sales. According to her, there was something like 7% of total vehicle sales last year. That said, ARK saw gas-powered car sales decline in the past couple of years and are seeing EV sales go up on a year-over-year basis. "We saw Tesla's revenue alone grow 50% this quarter, so I would look at that. And for macroeconomic concerns, I would be much more concerned about the companies that have the majority of their revenues dedicated to gas-powered car sales, because that's what we think is going to decline in the future as EVs become more cost competitive," says Keeney. Keeney believes that this is thanks to Wright's Law. Wright's Law aims to provide a reliable framework for forecasting cost declines as a function of cumulative production. Specifically, it states that for every cumulative doubling of units produced, cost will fall by a constant percentage. That said, Wright's Law forecast battery decline cost very well, which is why ARK thinks that it's coming down at roughly a 30% rate for every cumulative doubling and production that's going to bring sticker prices down and drive demand. In a statement in late September, ARK Invest CEO Cathie Wood said that she's standing by her bullish bets on Tesla. "We stand by all of them," Wood said when asked about her opinion on Tesla, Roku, and Bitcoin. In fact, Cathie Wood's ARK Invest splurged on shares of Tesla in early October as shares of the electric vehicle maker helmed by Elon Musk tumbled to their lowest level in 11 weeks. doubling down on a lofty investment as analysts remain bullish on the firm, can withstand weakening economic conditions as it gears up for third-quarter earnings. According to ARK's daily transaction reports, two of the firm's funds, including its flagship ARK Innovation ETF, bought a combined 132,213 shares of Tesla, representing a stake worth about $32 million based on the stock's closing price. The transactions came a day later after Tesla said it delivered a record 343,000 vehicles during the third quarter, up from 241,300 a year ago, but falling short of bullish analyst expectations calling for nearly 365,000 deliveries. ARK's flagship fund, which is down more than 60% so far this year, now holds more than 3 million Tesla shares worth about $739 million, its largest holding claiming some 10% of assets compared to 8% allocated to Zoom Video Communications and 7% to Roku. That said, many are wondering why Cathie Wood likes Tesla. ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization. This is not much of a surprise, as Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy. Indeed, it was Cathie's intervention by the way of an open letter to Elon Musk back in 2018 that prevented Musk from reacquiring Tesla's stock allocation and taking the company private again. The letter turned out to be a phenomenon of sorts. In it, Cathie Wood outlined a 5-year bull thesis for Tesla stock, pitching its price in 2023 as high as $4,000. Musk at the time was happy to pay just $420 for every share in his nascent stock repurchase scheme. Wood famously declared Tesla to be a value stock. This analysis can be explained through ARK Invest's concept of convergence. Tesla isn't just a straight-up EV play. It's a company that melds or converges multiple technology sectors and platforms into one entity. It's a robotics company, it's an energy storage specialist, it's an artificial intelligence software developer. It even has its own glass technology group. And this plurality is what gives it its deep value and its exalted position in the market. Furthermore, Tesla is a disruptor in the transportation space, which is straight out of Cathie Wood's playbook. ARK seeks out innovators and those changing the landscape in their respective fields. Many believe that while Tesla might not be the only EV firm in town, it is the one leading the pack and the one dictating the pace for its rivals in the race. In ARK's 2021 open-source Tesla model, they outlined their expected value of $3,000 per share in 2025. However, they updated this stance due to material changes, including autonomous ride-hail assumptions and inputs, capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. The updated model by ARK Invest shows updated assumptions for the total market of autonomous ride-hail at each price point and the probability that Tesla will solve for fully autonomous driving. Based on their analysis of customers' perceived value of time, they expect more demand for autonomous ride-hails at higher price points than originally modeled. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from $84,000 in 2017, when the Model 3 was ramping up, to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. Tesla has held up much better than most of the other stocks in the Innovation Fund because it's included in the broad-based indices now. Wood said ARK has used Tesla as a trading vehicle because of its relative outperformance, but the firm remains extremely confident in the stock longer term. Cathie Wood's ARK Invest says Tesla stock will more than quadruple in price by 2026 if it can deliver a network of self-driving taxis. ARK Invest reiterated its bullish view on Tesla with a $4,600 price target by 2026. Although Tesla stock has lost over 39% since the beginning of the year, Wood has been bullish on Tesla and has been an early backer of the EV maker. It is our top holding still, and our confidence couldn't be higher, the ARK founder said on a recent CNBC Squawk Box segment. Subscribe to this channel for more Tesla stock content.